Well, buybacks are booming. All this as companies repatriate hundreds of billions of dollars in money stashed overseas. But here is maybe the most important question for your money right now. What happens when that money stops coming in? Let's bring in Nick Colas, co-founder of DataTrek Research, who does a lot of work on this. Your note, always excellent in the morning, Nick, caught our eye, so thank you very much for coming on. First off, lay out for our audience, who probably doesn't track corporate buyback data as closely as we do, how big the buyback boom is right now.
It basically is at all-time records. For the 12 months ending June of this year, for example, it was roughly $646 billion, and that's up from $500 billion over the 12 months ending June of last year. So record numbers and extremely large. Yeah,
and so that money is coming over. The tax law, of course, changing some of the ways. So we expect that to continue for how long, Nick?
Well, it looks like it can continue for quite a while, because the good thing about the analysis that we did as far as being bullish on stocks is that even if you add up all the buyback money and all the money spent on dividends, it still doesn't equal the earnings for the S&P over the last 12 months. So there's a little bit of a buffer here. Companies could actually see some modestly down earnings next year and still be able to afford the buybacks and dividends they're paying right now. So even though it feels quite high and looks quite high, earnings are even higher.
It's not going to last forever. Eventually that buyback money, that repatriated cash will slow down or stop as companies just bring it all back home. What's going to happen when the buyback boom slows or ends?
You know, the buybacks are incredibly important to stock prices, and that's really the bottom line here, because unlike past bull markets back to the 80s and 90s and 2000s, investors aren't buying a lot of U.S. stocks. There's actually been $70 billion of redemptions from U.S. stock and mutual funds this year. And so the offsetting $650 billion of buybacks has been a big boom for stocks, and a big reason why we're up on the year, frankly. Once those slow, we do have to look for companies to continue to report very good numbers, because that's what supports stock prices more than people buying stocks anymore.
Yeah, and so what do you think is the biggest risk to the market outside? Is it the buyback boom slowing down? Is it something else right now, Nick?
It is a combination of a slower 2019, because let's face it, we've had a rock star 2018, both in terms of earnings and buybacks and dividends and the economy overall. Next year, we're going to anniversary all that growth, could slow down, and the earnings and buybacks slow down with them.